What's up, traders? Andrew O'Connell here with Pristine Capital. It is September 19th of 2022. Welcome to your market recap video. Hope everyone is having a good day. I get the feeling that within this market, there's a lot of participants that are really just getting upset, getting frustrated, throwing in the towel. After all, today was day 23 of the market sell-off. But we ended up having a pretty good outcome this Monday. Let's take a look at the box scores. We had the S&P 500. It finished up 0.78%. We had the NASDAQ up 0.6%. Our IWM small caps were actually our best performer, which is a good thing. They were up 0.85%. Our Dow was up 0.68%. And our ARK Innovation ETF was down 0.21%. But you can see that almost all these indices, they closed on the upper end of their day's range, which is great. Volatility did come in ever so slightly, and we had positive breadth pretty much across the board except for the ARK ETF. We had up volume of 73.9%. The trend model remains at a -3, but it is getting pretty close to turning to a -1. That could end up happening as early as tomorrow. So I'm getting a little bit more optimistic over here. And I think what really helps, this is something that I cannot stress enough. When we're on day 23 of the sell-off, we have to be cognizant of the fact that hey, this is a tough game. You know, it can be frustrating, it can be tiring, it can be mentally debilitating if you're just sitting on the screen all day. Let's say, you've taken a drawdown during the sequence and you're just like desperate. And you're like, I gotta get back. And then all of a sudden you just see the market chopping around for a couple hours. It is enough to make you want to bang your head against the desk. That's why it is super, super important when the market's just kind of like doing nothing ahead of a binary event, which is this Fed meeting. The market is really just inviting you to take a day off, or even not a whole day off, but the market is really just inviting you to spend less time on the screen. And I guarantee you, if your normal screen time is, let's say, like 5 hours out of the 6.5 of the trading day, if you cut that down to, let's say, like 3.5 or 3 on the days ahead of binary events or just when the market's chopping, you're going to find that your mental capital is actually building rather than diminishing because you're getting off the desk, you're getting a fresh perspective. Then when you come back to the market, you're just like, oh, what did I miss? Nothing. Not too bad. Um, we have the economic, not the economic data, the interest rate decision. It's going to be on Wednesday, so now we only have one more trading session ahead of the event. So tomorrow, like, are you going to make $1 million, swing trading the day ahead of the Fed meeting? No, I think tomorrow's a great day to really just look at your portfolio and say, hey, am I positioned the way that I want to be positioned into the meeting? If not, make some tweaks. But if you are, then tomorrow could actually be a pretty chill day as well. As of right now, we have an 81% chance that we're going to get a 75 basis point rate hike. And yeah, so we're looking pretty good on that. We're not going to be getting, um, the 100 basis point rate hike that many thought we were going to get. So we got this 81% chance right here. We have a 19% chance of the full 100 basis points. But the Federal Reserve, this is a nuance not many people really get unless they have like Fed insiders or just a deep understanding. The Federal Reserve is queuing off of the bond market. It is not the other way around. It's not like the Fed says what they're going to do and then the bond market responds. It is literally like the Fed looks at the Fed fund futures and they go, okay, the market priced in 75. All right, we're doing 75. Like if the market were to price in 75 bips, then the Fed just says we're going to do 100, that would be unprecedented. Like that does not happen, and they would just ruin the financial markets. So for that reason, they don't do that. So as long as this probability remains at an 81% chance, we're likely going to see tomorrow this is going to flip closer to 100. And lo and behold, we're going to get the 75 BIP rate hike, which at this point over the last week has been violently priced into the market. Finviz heat map, we got some strength in Apple, and we got some strength in Tesla. Tesla was our only trade today. I took some call options in Tesla right off the open. Sectors, take a look at what we got here. XLE, the energy ETF, was pretty much flat. Our big winners for the session, you can see that regional banks did pretty well, up 1.71%. Home builders were up 1.8%, and we had transports that were up 1.73%. Not really any clear leadership, I would say. This was kind of just like a bounce day in the market. In terms of style factors, we had the small cap value of 1.11%. We also had growth that was up 0.84%. And then in terms of trades, again, the only thing I did at 9:35 a.m. into the gap down that we had, I got long these Tesla October 21st, 316 spot 67 calls for 1425. And again, I'm really just looking for the relative strength in the market. And I do think there's a good chance that because we priced everything in for the Fed meeting, like this was the market pricing in new expectations for the Fed meeting. Now going into it, if the Fed just does what everyone's expecting, there's going to be some hedges that will likely fly off of the books as soon as that meeting is over. And this is like a tale as old as time. The market goes lower, we undercut the lows, then everyone gets worried. But I mean, look at the last 2 days of price action. What's going on here? Here we had losers that sold the lows, and then we had other players that, likely sold much higher that were buying those assets off of them. Today, again, we had losers selling the lows at about 38.50. Can you imagine, like, if you've been just holding on to your longs this whole time and now you're selling them? Like on day 23 of this sell-off? Like, it just doesn't make much sense. Like, you're selling now when in October the seasonality really picks up. The week seasonality lasts typically until September 25th, and then things get a lot better. So I don't say that to be like, just rude or whatever, but it really is like anyone that's like selling into these lows, those are definitely not like the A players. Let's just put it that way. In terms of our hourly chart, we do have some new weekly value areas. And look, we are currently trading inside of this weekly value area. So you can use this 38.79 as a pivot level. If we start trading below that level, you can say, okay, things are changing. We could actually get a breakdown. But for now, things are looking okay on this short-term time frame. Let's take a look at the NASDAQ. NASDAQ up a smidge in the after hours. And again, same dynamic, right? We had some weakness on Friday. That weakness was bought into. We also had some weakness today. We made a higher low, which is significant. Sometimes these little minor details actually matter. But we made a higher low today, and buyers again stepped in. So over the last two sessions, we have had some accumulation in the market. Russell 2000 also put in a pretty good candle today. This one actually did make a lower low, and we got, look at this, two hammer candles in a row. So there's been sellers on both of these days, and there's been buyers. So you have to ask yourself, is it smart money that's buying or smart money that's selling? And let's take a look. We have our Dow Jones kind of doing the same thing. And let's take a look at some of these names. One name that I want to share with you in particular, this is Rumble. Rumble had its debut, and we are currently short the October 10 strike puts here, and this one just had an awesome blast off for the first day of trading. Some other names, Enphase. Take a look, this one's shaping up very nicely. I think this is a really good long candidate. This is actually our biggest position on the books right now. We have Wolf, which attempted to break out. This is another one of my big positions. And it looks like the breakout was kind of sold into, but we did end up closing up pretty nicely. So we really just got this power earnings gap set up, and then it's really just been some sideways drift on low volume. We've seen this 20-day simple moving average catch up to price, and the 50-day SMA is also beginning to catch up. What else do we got? Montauk Renewables, we added this name on Friday. And again, it is a tough market, but when you're adding exposures and the exposures are going in the money right away, it's tough to really get too scared. Yeah, Montauk, we bought this stock underneath the 20-day SMA on Friday, and now you can see we're testing this top of value. Now, if we get any sort of market strength, I do believe this stock can retest these prior highs. So definitely just looking out for that. I'll probably take a target if it does retest those prior highs. And then, of course, Tesla, which we added today. Tesla, look at this. So we have like a cup right here, and then we're building out a handle. And look how many green candles there are in this cluster. So there is some accumulation going on of Tesla. We're out above this monthly value area. So as bad as things feel, as bad as the narratives are, bottom line is the day count for this sell-off, it's definitely getting a bit extended. We have a Fed meeting coming up. and we kind of know what's going to happen at that Fed meeting. And then soon after that, we're going to be entering the good seasonality. So I'm just trying to keep an open mind here. It's certainly possible that the market sees a little bit more downside, but I'm starting to look forward to, some better things in the future. So with that said, that about does it for today's market recap video. Hope you all had an awesome day today, and of course, we will see you all next time.